So for the fifth straight session and the 11th time in the last 12 days, when you read it like that, it's like, damn, it really has happened, huh? But the Russell 2000 has outperformed the Nasdaq. Of course, we know Tuesday was crazy because that was the day well, the end of the day. Tuesday earnings came out for Google, and on Wednesday we saw the real reaction. But the CEO stated that AI investments are not going to pay off really fast. Of course, the people didn't seem to like that, and Tesla just flat out missed earnings. So it seemed as though like if there was this situation where one of the tech names kind of it was like blah on earnings, the market would take it not too kindly, and that's exactly what happened. We also saw gold and silver get whacked. Gold and silver got smashed as well. Gold and silver have been moving for, you know what, to be honest with you, not too many clear reasons for me all year. I mean, they found different narratives for different things, whatever, but they've been moving really strongly, and they just finally turned the corner to the downside recently, and it looks like it could get ugly, so I'm not sure. But big moves to the downside in gold and silver. Not sure what they're doing today, but yesterday it really got handled. The Japanese yen has been the surprise here. Recent surge, a lot of it's being attributed to the unwinding of the carry trade. What do you guys think about that one?
The hard part about the carry trade is that when it, depending on what side you're on, when it unwinds, like there's so many people that are caught, trapped like a rat in the, on the principal risk. It's just weird. Yeah.
People just need to look no further than the Australian dollar /6A. It's been getting rocked. You can look at copper, same deal. I mean, this is a real thing. Like it's actually seemingly happening. And, usually at first people were attributing the upside move in the yen to intervention, right? And we've seen intervention like probably 3 times over the past year and a half. And most times it has intervention and then lower. And so initially when yen was popping up, I was thinking about shorting it, but I'm like, nah, I'm good. I'm not doing it this time. And yeah, this could get wild, especially because when you look at, again, you look at the Aussie, you look at copper, it's clearly like kind of a global situation happening right now. So I'm not going to touch it, but that's another thing that's going on. So you got this rotation and Russell and NASDAQ, you got earnings coming up, currencies moving around a good bit, the metals moving around as well. And then, of course, finally, I mean, VIX and VVIX are up for the second week in a row, trading near those long-term averages. VIX is not quite 19, but it's been up there. And VVIX is above 100. So we got some wild stuff going on in markets.
Yeah, VIX was up to 18.5. That's VIX if you're looking at that. /VX was higher, above 17 and change. I want to get to your gold trade for a quick second because I've had a gold position on that I kind of sold premium in, which I regret as volatility has continued to stay higher in gold. But I want to caution people, at least in GLD, the monthly implied volatility is like 15. It's almost like trading a bond that has an auction almost every day that moves, outside what seems to be outside the expected move, only to go nowhere. And for a style of trading like me of adjusting up and down, I've been chopping myself up in there like crazy, even though it has a good IV rank of 55, 60 sometimes. Gold has been a tough trade. I think you need to trade gold and most commodities in a more of a directional bias by selling premium than just selling both sides, which is what I typically like to do. So gold's a struggle trade for me, or whatever it goes, whatever price.
Oh, that's a good new name for something. The struggle trade. I like it. No, I'm not kidding. I'm not saying it to
be joke. It could be a lot of things, though.
I know, but I like it.
Struggle trade.
It's a struggle trade.
What's an example of a struggle trade?
Gold.
Gold. You just said.
Besides gold.
For me, I got a bunch of them.
I know you did. That's awesome. No, it's funny, Tony, you mentioned that. I actually had a similar trade in gold. I had a similar exact trade in gold, and then when it pierced through 2,400, maybe a week and change ago, I had to close it out because that was way above my upside strike. And yeah, it's been that is a tough trade because the vol is there, but it's been moving, man.
The vol is there, but the monthly implied vol isn't there. 15, in this environment, there's so many other things that have 40, 50% monthly implied volatility. You can get a much better bang for your buck, unless you have a directional bias, I think, in gold. That's my practical application trading struggle trade.
Got to take a look at this VIX curve because it is weird looking right now. November election, of course, is that peak there. Look at the difference between September and October VIX. For those who don't understand, that's October VIX. But VIX is 30-day forward-looking, so it's using November options in the SPX, which capture the election, and that's why October is trading higher than September and November VIX. And look at the difference between Sep and October. $1.65. Difference between November and October, November. So during the election and after election, 75 cent difference. That's pretty low actually. It was upwards of $2 at one point in time early in the year, but it's kind of calmed down. But the interesting thing too, and I can't figure out yet, look how much it drops off. You look at December. December's really down there, and then it picks up again. Kind of interesting. I mean, it's basically, we are ignoring August right now, and it's like a little bit of contango, I guess, in the front. Gets the backwardation from November to December, and then December through early next year is in contango. So really strange looking VIX curve right now.
Yeah,
So
it
do you
is
think
because
you think it's related to the elections or anything like that?
well, of course, the September October higher VIX is absolutely related to the elections, and then after the November election, the VIX drops because a lot of that's off the table. But there's always some uncertainty because there's new context around elections that we never had before, which is challenging election results.
Yeah, yeah.
Things like
That's true.
peaceful transfer of power, that kind of stuff.
That's actually true, and it's funny you say that because that was the same thing that they were talking about in 2020, and it seemed I didn't believe that at the time, but
No.
now you're right.
No, you didn't believe it.
November is much higher than December.
You didn't believe it until January 6th, and then you realize, oh man, peaceful transfer of power, that doesn't exist in America anymore. We thought that only happened in third world countries. So,
So the whole 2% down thing has been broken. Look how long that streak was. That goes back to March of 2023 that we hadn't had a 2% down day in the market.
Finally.
Yeah. Okay, contain yourself. Calm down. Just relax. Yeah, big 2% down day in the other day. I know we have research probably on this, right? Like how often one of these things follow another and how quickly it happens. Probably be a good time to pull those up, but I would not be surprised if it happens again. Maybe next week or something. I kind of honestly wouldn't.
And statistically, the chances of it happening again is quite high.
That's very well done by you. You're actually previewing the absolute end of this show, where I think that's the piece I picked. I mean, again, all the other stuff happened. We talked about the rotation. We talked about metals. We talked about volatility. This is another thing. The 32-year, it's the steepest that we've seen in 2 years. And the 5s and 30s is the steepest that we've seen since May of 2023. So there's something happening in bonds too. Even if bonds aren't reaching new levels per se, the ones that we probably trade the most, the 10s and the 30s. 2s, oddly enough, on that big down day on Wednesday, 2s were down. They were like the only ones that were down. And so steepening is starting to happen. I have not had on any bond, I should say yield trades. I haven't had any steepeners on, but you know what? It might be time for a steepener for those who are interested because it's starting to really move. Even the 2s and 10s, I think that spread is around 18 basis points. It's been hanging around 30 to 40 inverted for a long time, and now it's 18. So it's actually starting to move.
So I don't think that's a trade we've put on for a while now. What do you think about it?
I do not have on a yield curve trade. Don't think I'm going to put it on here, but I do think it's going back to zero. So it's the direction I would want to be in, but I don't have it on right now.
Again, also here in the bottom left corner, it's 100% chance of a September cut now versus 66% chance a month ago. Now, again, these are just futures, but that moved around a good bit too this week. There's been a lot of moves this week.
That's what you call building it in. 100% chance is building it in.
When's the last time you had 100% chance of something? I know this is going to go left so fast. Ford, GM, UPS, not really good on earnings. All those suck. Bank of Canada cut rates a 0.25 percentage point, citing downside risk. They're worried about what's going on with the economy a little bit, and they cut rates ahead of time. Similar to Bitcoin in January, Ether is experiencing the sell the news moment. ETFs debuted on Tuesday. Next week, we got the JOLTS report on Tuesday. We got Fed on Wednesday, and we got non-farm payrolls on Friday. And then, like you said, Tom, the research this week that I found interesting is market measure. What are the odds of a reversal? That's all I got.